Good evening, everyone. I'm Rashmi from Great HR and today's moderator of the session. A warm welcome to one and all to our 38th session of Ask the Expert webinar Parichay. So, as you all know, today the topic is the most awaited topic, I can say, that is a masterclass on the national pension system. So, dear attendees, before I dive into the topic, I would like to give you a few general instructions on how the session goes. So as you know, the instructions are the same. That is, the session is divided into two parts, wherein the first session, we will be having a discussion with our expert today, which is then followed by the audience Q&A. So the audience Q&A, the second part of the session is where I can say is time is all yours, because that's when you can start putting across all your questions related to our topic and the discussion we are soon going to have. And you can also seek answers from our today's expert. So also, if you're worried about missing out on any part of our today's session, not to worry at all, because currently the session is being recorded and the same will be shared with all of you once this session is done. So I hope with this, we are now good to go ahead with this session. So let's start without any delay. Talking about today's topic, that is National Pension System, NPS. It is very popularly known as NPS, right? So many of us know what is NPS, but we often fail to define it, right? So here is a small attempt to define what is this NPS. So it is basically a voluntary defined contribution retirement savings scheme designed to enable the subscribers to make optimum decisions regarding their future through systematic savings during their working life. NPS seeks to inculcate the habit of saving for retirement amongst the citizens. It is an attempt towards finding a sustainable solution to the problem of providing adequate retirement income to every citizen of India. Well, that is something that we all have heard of and read on various sites, but to understand its gamut in detail could be challenging, right? So, for example, like what are the tax benefits of NPS? Or maybe like who is eligible for it, or what are its other salient features. So in the next 1 hour, we are going to discuss all about this in detail with our expert, CA Amaranath AS, and understand the national pension system in detail. Well, before we start off with our discussion, let me tell you a little bit about our expert today. So, Mr. Amarnath is a CA by profession and has around 19 years of experience in the fields of NRI, HNI, taxation, and not just that, even the US tax and labor law consulting. He started his career in the International Executive Services Division of KPMG Global Services, where he worked on US tax returns and related compliances for expatriates. Prior to starting the firm, Mr. Amarnath worked in the Global Employer Services practice in Deloitte, Bangalore. His expertise includes various facets of global mobility like expatriate tax, social security, PF implications on international workers, ESOPs, immigration, assignment structuring, etc. He was an active member of the team which makes industry representations to the Ministry of External Affairs through NASSCOM in matters concerning social security legislations. In his current role, he has assisted his clients on PF matters, issues relating to international workers, gratuity trusts, etc. He has also advised clients on matters relating to labor codes impact analysis, structuring, that is compensation structuring, labor law compliances arising on account of merger or demerger, etc. So, Mr. Amarnath, we are delighted to have you here in the session. Welcome to the session once again.
Thank you, Rashmi. Thank you.
Yes. So I think we are now heading towards the first part of our session, that is the discussion. So, Mr. Amaranath, we would love to hear from you all about NPS today, like whatever possible, because I understand that NPS is a huge topic to discuss, right? So it's like never ending thing, but we will try and cover maximum today so that all our attendees get the benefit out of this. Well, to start with, maybe I can say let's start with basics. So, according to you, Mr. Amarnath, what is NPS? And please help us understand its salient features.
Good. Great to start with. So coming to NPS, NPS is popularly known as National Pension Scheme rather than National Pension System. But actually, when you formally look into the rules and the legislation, it is actually a national pension system. Just to give you a small background about this NPS, it was introduced in 2003 and it was extended only for government employees initially. And later on in 2009, this NPS opened up for even for private sectors and also all the citizens of India. So whether you are an employed or not employed, even if you are a self-employed, it was opened up in the year 2009 for receiving the contributions from the general public. And also it has been regulated by a government agency called PFRDA, Pension Fund Regulatory and Development Authority. And government through PFRDA makes these legislations and amends these rules and regulations. And I would say that the PFRDA is a completely a government agency which takes care of the governing of this entire national pension system in India. And coming to the question, the salient features, I mean, the one session may not be enough to explain the salient features of this NPS, but however, we will try to cover most of the topics related to this NPS. So it's a low cost product. The very first thing is a low cost product. See, comparatively, when you look at the other investments in the market, either it could be a mutual funds in which you go for a debt fund or an equity fund, the comparative cost, if you look into, the NPS investment comes at a very low cost when it compares to the other products available in the market. Other features are like tax breaks for individuals. So we will discuss that further. What are the tax savings or tax benefits available by contributing, and what are the tax implications available at the time of lump sum withdrawals on or partial withdrawals, all these things. More or less, comparatively, when you compare to other investment, the tax savings or the tax breaks, if you see, it is significant in the case of NPS. And another important feature of NPS is it is market linked returns. When you take a PPF or a PF, there is a prescribed rate of interest which is specified for those products, and you are going to receive that interest. However, this is completely market linked. So if the markets are performing really well, the returns will be way above the other products. However, of course, there is a small risk as well. So if the markets are not performing well or the funds are not performing well, then there will be a dip in the returns compared to other products. So it is more like a balanced situation. If a person wants to balance his portfolio, looking at the return and risk, this is one of the investments which he definitely needs to look into. Then another important feature is the individual himself can choose his portfolio or investment option. Whereas in the case of PPF or PF, in the case of PF, the PF Central first prescribes the investment options, and accordingly the investments would be made. So the return is not in our hands. I mean, I cannot choose the investment which I want. Whereas in the case of NPS, it is completely available to the individual to go for choosing the investments which he wants to invest. And another important aspect is there is a much more flexibility compared to other products with respect to contributions. Again, I would take the example of PF, where contributions are prescribed and defined, which is 12% of your basic and DA. Whether, that 12% is a mandatory contribution both from employer and employee, whereas NPS gives much more flexibility with respect to contributions, and we will discuss those in our discussion today. And another important aspect is the pension after retirement. See, private sector, generally the pension was not available earlier. Only for government sector employees, the pension was available. However, with the advent of NPF, that has been taken care to certain extent. So by investing in PPF, even a private sector employee or even a self-employed individual can look for some retirement benefit post his retirement. These are the couple of salient features, Rashmi, with respect to NPS.
Sure, sir. Can you also please help us understand who is eligible to open this NPS account?
Yeah, NPS account is open to general public, so all citizens of India between the age of 18 and 65 years can open NPS account by visiting any POP, that is point of presence, what we call it as. So, and also he can visit any banks to open this, and they can continue contribution up to 75 years of age to this NPS account. And from October 2019 onwards, even for OCI card holders, the investments in NPS are permitted. They are eligible to join now. However, just remember, it is only for OCI card holders who are eligible to join, but not for all foreign nationals. If there is a foreign national who is not having an OCI card, he is still not eligible to subscribe to NPS.
All right, thank you so much. So, sir, my next question is, in that case, how can one open a NPS account? Like, what are the major steps involved in it?
A very simple process. It is similar to opening a bank account in any of the banks. So by submitting a form and your KYC documents, your NPS account can be opened within few hours. And if your Aadhaar is available to any individual, he can link his KYC to Aadhaar and he can open the online NPS account within few minutes. No need to visit any banks or any custodians as well. So within few minutes, a person can open this NPS account. And similar to bank account, he will receive a separate number called PRAN, PRAN, Permanent Retirement Account Number. So contributions can be made online, even withdrawals can be made online as well. So it is completely a very transparent and simple process compared to any other products available in the market. So anyone between the age of 18 to 65 years can just log into the NSDL account and open his PRAN, which is a permanent retirement account, in few minutes. It's that simple.
Great to know that, sir. All right. Sir, in that case, are there any different types of accounts under NPS? If at all they are, then what are those different types of accounts?
Yeah, very good question, and an important question as well. The rules and the tax benefits differ with respect to the types of these accounts. Okay, and there are two types of account broadly. One is tier 1 account and tier 2 account. One cannot open a tier 2 account without opening tier 1 account, which means to say that tier 1 account becomes mandatory account to open an NPS account. And another important feature of tier 1 account is restrictions are applicable with respect to withdrawals into tier 1 account. Because there are significant tax benefits are available to tier 1 account. And coming to tier 2 account, it is more like a voluntary savings scheme or a voluntary savings facility. Members will be able to withdraw the amount anytime without any restrictions. Of course, there will not be any tax benefits available to it. So tier 2 is more like a bank account. However, it will earn the returns based on the fund performance, which is completely market linked. But whereas tier 1 is a mandatory account, and also restrictions are available at the time of for the purpose of withdrawals.
Great. All right. Okay. Sir, next I would like to know, are there any tax benefits of this NPS contributions?
Yes. Significant tax benefits. And again, the tax benefits differ between tier 1 and tier 2, depending on the type of the account, what you're investing. So let us discuss tax benefits for tier 1 account first. So under Income Tax Act 80 CCD, under Section 80 CCD 1, an individual can contribute up to 20% of his gross total income, or if he is an employee, 10% of his basic and DA as a contribution to NPS. And this goes as part of ATC limit, which is 1.5 lakhs. And apart from that, ATC under section 80 CCD 1B, in addition to this 1.5 lakhs, another 50,000 is again available as a deduction towards employee contribution to NPS. So just to give an example, if an employee has contributed 2 lakhs to NPS during the year as an employee contribution, he can avail under section 80C 1.5 lakhs. In addition to that, he can avail 50,000 under 80CCD 1B. So the total of entire 2 lakhs he can avail. Assuming the employee has contributed only 75,000, again that 75,000 is available under section 80C overall limit of 1,50,000. Say suppose the employee also has a PF, PPF or a tuition fee, whatever, and those are already coming to 1,50,000, then what happens to NPS contribution? If the employee has made 75,000 as employee contribution and he has 1,50,000 of all other tax saving investments under section 80C, then what happens to this 75,000? This out of this 75,000, he can claim in addition to 1,50,000, that 50,000 contribution towards NPS under section 80 CCD 1B. So what we advise is, if an employee has already met the cap of 1,50,000 because of other tax saving investments, then he could restrict his NPS contribution to 50,000 to avail the tax benefit. This is employee contribution. Then coming to employer contribution, under section 80 CCD 2, the employer contribution is eligible for deduction up to 10% of his basic and DA. So, I mean, unlike PF, where the employer contribution is not part of the taxable salary at all, but in the case of NPS, it works as a deduction. That means out of your total income, employer contribution will be deducted from the income. Both employee and employer contribution, for that matter, will be deducted from the total income, and employer contribution is only up to 10% of basic and DA. And this is again under section 80 CCD 2. Now coming to tier 2 account, what happens to the contributions in tier 2 account? Tier 2 account, as I mentioned, the tax benefits are very limited, or rather I would say it's only for the government employees. Contributions to tier 2 account will also qualify for deduction under section 80C up to 1,50,000 only in case of government employees, whereas in the case of private sector employees, any contribution towards tier 2 will not be available for income tax deductions. Though in case of government employees, the deduction is available, there will be a lock-in period of 3 years for withdrawal purposes, and we will discuss the withdrawals in the later part of the session. So, I mean, as a part of proof submission, if any employee comes and submits a proof saying that I have opened an NPS account and I have contributed so-and-so amount to the NPS account, it qualifies for deduction only if it is a tier 1 account. So as an employer, the risk is on your end to verify that it is tier 1. Of course, the statement will provide the information whether it is for tier 1 or tier 2 account, but ensure that you are properly checking and ensuring that the contribution is going to tier 1 account only to provide the tax deduction.
All right. So, sir, since we are already talking about the contributions and how is it going to benefit us, can you also throw some light on what are the minimum contributions for different NPS accounts?
Yeah, again, it differs from tier 1 and tier 2 accounts. So coming to tier 1, the minimum amount of contribution, that means if a person is making a contribution, he has to contribute minimum of 500 rupees. That means per one contribution, there has to be a minimum contribution of 500 rupees. But for the entire year, the all contributions together, there has to be a minimum of 1,000. That means there has to be minimum 2 contributions for the year, which has 500 rupees as a limit. But if you are contributing more than 500, maybe in the case of an employee, he may contribute 50,000 in one shot. That is fine. But your contribution for the entire year cannot be fall short of 1,000 rupees. So there has to be a minimum contribution of 1,000 rupees in a year, and also per contribution you must contribute a minimum of 500 rupees. So how many contributions need to be made in a financial year? There's no limit. The minimum contributions are at least one contribution should be made in a financial year. Coming to tier 2, the minimum amount of contribution per transaction is rupees 250. So if a person is contributing to tier 2 account, he cannot contribute less than 250 rupees. However, at the time of opening the account, tier 2 account, for activation purpose, you should contribute minimum of 1000 rupees. So this is all about the contribution, minimum contributions required for these accounts.
Sure, sure. Thank you for sharing that insightful answer, Mr. Amaranath. I'll just move to our next question. I think you have partially answered this, but still I would like to touch upon this. So the question is, how do NPS contributions through employers work?
Yeah, this is also very interesting and very different it is compared to other schemes available. So unlike PF where equal contributions are required, which I already explained that the 12% contribution is mandatory for both employee and employer side. But however, in case of NPS, no such stringent rules. So the contribution can be completely flexible and it can differ between employer and employee. So under this scenario, we come across with three different situations. It could be equal contributions from both employee and employer. It could be unequal contributions both from employer and employee. As I said, employer, the tax benefit is available only to the extent of 10%. So he may contribute only to the extent of 10%. So employee can't contribute beyond 10% as well. It can go up to 12% or 15% as well. And there can be contributions from only one person. There is no mandate that both employer and employee has to contribute. So the contribution from employer can be 10%, whereas employee contribution could be as low as zero as well. So it is completely flexible. And another important aspect is the corporate person, which is if you are routing the investment through your employer can choose your investment option. We will discuss what are the investment options available. For the time being, just understand that a corporate can choose the investment option. And if the corporate has chosen, for all the employees of that corporate entity, the same investment option would be applied by your service provider. If the employer is not choosing the option and if he gives that choice to the employees can select their investment option according to their will and wish. So it could be active choice or auto choice. It will be left to the employees provided the employer passes on the choice to the employee. And also these investment options can be changed by the employees, again, provided the employer has given the option for the employees. If the employer is making the decision with respect to investment option, that will be uniformly applied to all the employees in the company.
All right. So, Mr. Amaranath, from this discussion, I clearly understand that it is a part of our statutory compliance, right? Next, my question is, what are the charges and penalty for non-compliance of mandatory minimum contributions?
Yeah. So let us first discuss about the charges. As we already said, the charges are not that high, very minimal compared to other funds or other schemes available in the market. So initial contribution, the subscriber for registration, he has to pay minimum of 200 rupees. That may go up to 400 rupees depending on the service provider and also the amount of contribution. And later on, initial contribution, there has to be a 0.5% of service charges. And subsequent contributions also will attract a 0.5% of service charges. However, if it is an online transaction, the subsequent transaction, if it is online transaction, then it is only the fee will be 0.2%. And apart from this, there will be a maintenance charge of 100 rupees per annum, which they recover quarterly, I think 25 rupees per quarter. And apart from this, for non-financial transactions, could be a change in address or any such sort of things, per transaction, 30 rupees is the fees. So, and then coming to the next part of the question, if the minimum contribution is not met, then what would be the penalty? See, to my knowledge, I don't think there is any penalty as such, but what happens is if there is no minimum contribution during the financial year, the account will be frozen. So you will not be able to carry out any transactions in the account. So again, you need to request for activating the account and then make at least minimum contribution.
Sure. Also, sir, I remember that you were talking about the investment options, right? So can you please help us understand what are the investment options that are available under NPS?
Yes, definitely. See, broadly, there are four asset classes. See, when you look at PF or PPF, it is just like a deposit where we earn interest. But NPS is not like that. It is more like a modern investment plan, which is market linked, I would say. So there are broadly four classes of assets, which are equities, which is equity mutual funds, and then government securities, corporate debts or corporate bonds, we call it as, and then alternate investment funds, which are AIF. So there are two options. These are the four asset classes. Then another the thing which we need to look into is the investment choice. So there is one default option. If the investor does not opt for any of the choices, then it goes into automatically default option, or he can also consciously choose a default or auto choice option. Under this method, what happens is the money or the investment amount will be invested in the above asset classes in the defined proportion based on the age of the contributor. So as the individual's age goes up, the exposure to equity will be reduced. Depending on the, see, this is a scientifically driven proportions. And say, for example, if the age of the employee is 35 years, the maximum amount which can get into the equity could be a 70%. And when he becomes 36 years, the equity investment will come down by 2 or 3%, maybe a 68%. Then again, if he reaches one more year, 37 years, then his equity investment will be reduced by another 2%, which comes to 66%. So based on that, based on the age of the employee or age of the individual, the proportional investments in equity will keep reducing as and when the age goes up. This is an automatic choice. And this is preferable, especially if you want a balanced approach to your investment between equity and government securities. The debt gets gradually reduces while in government securities it increases. Basically, the equity investments will gradually reduces, whereas the government investment in securities increases. And another option is the active choice option. Under this, the choice is completely left to the investor, that is the individual. He can go and choose what proportion of his investment wants to be in equity or what proportion he wants in corporate debt or government securities or AIFs. So if he wants to invest 100% of his investment in equities, he can go ahead and do so. So depending on your risk appetite or the investor's risk appetite, he can build the portfolio by allocating the funds amongst the four asset classes which we discussed earlier. However, in both these options, choice will be available to the investor to change his investment choice or the investment option at any point in time. However, if you are going for the active choice option, you cannot make that choice every month or now and then. So maximum four choices are given during the year. So four times during the year, you can change your investments under active choice option. Under default option, anyway, no need of looking into your investment. Automatically, depending on the defined proportions and based on the age of the employee, the system automatically allocates the investments in equities and other funds.
Sure, Mr. Amarnath. Thanks for helping us understand that. Also, I'm sure there is definitely some interest rate on the NPS contribution as well. So can you please explain what is the NPS interest rate, and if at all we ourselves have to calculate it, how do we do that?
Okay. See, as I said, there is no defined interest rate for NPS. Of course, you are going to get the return on your investment, but it is not defined. See, in case of PF, every year the government declares the rate of interest, which may fall between 8 to 9% anywhere, 8.5%, and it's been there for a couple of years. It has been 8.5%. Whereas PPF also the government defines the interest rate, and accordingly the banks will pay the interest, which may fall between 7 and 7.5%. So, but in the case of NPS, how it works is the government is not guaranteeing any return on the investment. It is completely market linked. It's based on the fund performance in the market. So, in a way, I would say that there is no guaranteed return assured in the case of NPS. So, it is completely dependent on the performance of the markets. Past trends, when you look at the past trends, it has shown that on an average, I mean, we cannot say that this is for active choice or default option. All put together and all the funds together, it has given an yield of 9 to 12%. It ranges between 9 to 12%. Of course, this year, which is 2022, the yield is very good because the markets are performing really well. So there is no fixed rate of return, or we will not be able to estimate that. However, at the end of the year, if you log into your account, you can see the percentage of return which you have got from the fund till date and also year wise. So in a way, it is, I mean, you will get to know what is the return on the investment. However, that is, as I said, there is no guaranteed return assured by the government on NPS investment.
All right. Yeah. Thanks for sharing this, Mr. Amaranath, because just like me, a lot of us understand that, or we are under the assumption that there's some certain fixed rate of interest, and I definitely have to get this by end of my employment or something. So thanks for bringing it up here. Next thing, what we would like to know is, so far from our discussions, we understood that the contributions are exempt for tier 1. Right. But is it taxable at the time of withdrawal on retirement, or how does this taxation work at the time of retirement? Mr. Amaranath, can you hear me? You're on
Yes,
mute.
yes, Rashmi, I can hear you. Yeah.
Yeah.
Yeah. So that is also very interesting. We already discussed that the contributions are exempt to, and also there are limits and percentages of contributions prescribed for tax exemptions, which we already looked into it. And now let's see what happens at the time of withdrawal or at the time of retirement. This is not an early withdrawal. What I am talking now is the withdrawal at the time of retirement. So withdrawal can happen at the age of 60 years or beyond until the age of 75 years. So the investor or the individual has an option to choose his withdrawal at any age after once he attains 60 years up to 75 years. So if he does not want to withdraw even after retirement after 60 years, he can continue the fund till the age of 75 years. However, one thing you need to remember here is the contribution has to be stopped at the age of 65. Beyond 65, we will not be permitted to contribute to the fund. However, he can still hold the funds in the account, NPS account, till the age of 75 years. So from coming to the tax benefits, maximum of 60% can be withdrawn as lump sum, and minimum of 40% has to mandatorily go to annuity. So what happens to this annuity? This 60% anyway, it is withdrawn, which is completely tax-free. You can enjoy the corpus in whatever way you want. However, this 40% has to be invested in an annuity, which generates a monthly pension. So what happens to that annuity? That annuity is completely taxable. So the pension or annuity what you get from the 40% investment is taxable. However, the 60% lump sum withdrawal is completely tax-free. And recently the law has been amended to say that in the case of lump sum withdrawal, if the total corpus is less than 5 lakhs, 100% withdrawal is allowed. There is no mandatory contribution to annuity. That 40% which has to go to annuity is not required if the corpus is less than 5 lakhs. So what happens to the taxability or taxes when it is less than 5 lakhs? So 60% is again exempt. However, that 40% will be taxable.
Sure, Mr. Amaranath. So actually this leads to my next question then. Can I withdraw this NPS earlier to my retirement? Like if at all I can, then what is the process?
Yeah, partial withdrawal is allowed. However, there are under only specific circumstances. partial withdrawals are allowed, and also there is a limit on the withdrawal. So let us see what are these specific circumstances where the partial withdrawal is permitted before the retirement age, that is, which is 60 years, before 60 years. One is for higher education of children, marriage of children, and then purchase or construction of a residential house, or treatment of specified diseases. Here again, not all the diseases, it is specified diseases like cancers, and then TB, and there are certain set of diseases which are prescribed for this. And then setting up a new venture or a startup. If you are coming up on your own self-employment business and you are starting a startup for that, then again you can withdraw the amount before 60 years of age. And meeting expenses for skill development or reskilling or self-development activities. So basically, you have to reskill yourself to the current scenario. You may have to take up some courses or attend some classes. Then even for meeting those expenses, you can withdraw this prior to the age of 60 years. So what are the other rules applicable? A maximum of 3 withdrawals are permitted during the lifetime of the individual. That is, before 60 years, you can withdraw up to 3 times only. And 3 years should have been elapsed from the date of joining NPS. Though from the date of subscription, minimum of 3 years should have been elapsed at the time of withdrawal. And the maximum withdrawal of only 25% of the employee contributions or the contributions made by the individuals is permitted. The employer contributions are not allowed for withdrawal for any reason. It's only 25% of the employee contributions is allowed as an early withdrawal, and only for the in case of situations what we discussed above. And also only maximum 3 withdrawals are permitted during the lifetime of the individual. So in case of reskilling or skill development programs, the 3-year schooling period which we discussed, that need not be there. So even if there are, if it is the less than 3 years, your early withdrawal is permitted only in the case of meeting expenses for skill development or reskilling or self-development activities. And now the next question may come up as to what happens to this partial withdrawal. Is it taxable or tax-free? And up to 25% only it is allowed. So this 25% is completely tax-free because it is anyway employee contribution which is coming to you as withdrawal. So it is completely tax-free as well.
Excellent. Thanks, Mr. Amaranath, for letting us know about this. I just have one last question, but before that, dear participants, if you have any questions, start putting them across in the Q&A option of the Zoom control panel. In just a couple of minutes, we will take up your questions and we'll try and answer them. All right. Mr. Amaranath, while we are having this discussion, I realized that NPS and PPF, they somewhat sound very similar, but we also understand the fact that no, these are definitely not similar. There's a whole lot of difference between them, right? So according to you, which one is better, NPS or PPF?
Yeah, so we already saw how NPS works. I mean, the entire discussion, we have seen the investment options and what are the salient features of the entire thing. So there is no thumb rule to say which is beneficial to a particular individual or which is a better investment. All I can say is NPS is completely market driven and returns depends on the fund performance. Whereas in the case of PPF, there is a guaranteed return prescribed by the government, which is available to the individuals. So depending on the risk appetite of the individual, and he has to decide which one, which scheme better suits him. So there is no thumb rule. So it is an individual's choice depending on his financial commitments and the risk appetite. He has to choose whether he has to go for NPS or PPF.
All right. Thank you so much, Mr. Amarnath. I'm sure the information that you have shared here is definitely going to help a lot of us when it comes to this NPS. So I think now it's time for us to take up the
I
audience.
have one more point to cover, Rashmi.
Yes, yes.
So many of the employees may have a question as to when they are switching their jobs from one employer to another employer, what happens to their NPS contribution? See, what happens is I may have my individual NPS account now, and when I join a company, they may have a corporate plan, NPS plan. So can I merge my individual account with the corporate plan? That question may be there. So in those cases, yes, definitely the individual can submit a form to link his individual account and convert that to a corporate plan. So the same individual account will be converted to corporate account, and all employer contributions will be made to the same account. And there is another scenario where I may have a corporate account. I may switch over to another employer where he doesn't have a corporate account for NPS at all. So what happens to that corporate account which I already have? So in that case, the employee has to apply for shifting, which is called ISS form, intersector shifting form, after leaving the employment, and submit the same to their POP or CRA, who converts that corporate account to individual account.
All right. Thank you so much, sir, for enlightening us on this. So I think now we can head towards the audience questions. So we already have a few questions lined up, so I'll take them up one by one. So the first question is from one of our attendees who would like to know, can a person holding tier 1 account open tier 2 account as well?
Yes, definitely. Definitely, he can open both tier 1 and tier 2 account. If he is having a tier 1 now, yes, he can open tier 2 account. Without opening tier 1, he cannot open tier 2.
All right. So I hope that answers the question. I'll go to the next question. So, Mr. Amarnath, I think you have already answered this question, but if the reinforcement helps, then the question is, what is the lock-in period?
The lock-in period comes into place in two situations. One is with respect to the government employees making contributions to tier 2 account. See, as I mentioned, tier 2 account is more like a savings account, and the withdrawals are very flexible in tier 2 account. Whenever you want, you can just go and withdraw that. Whereas, in case of a government employee, tax benefit has been granted to him, even if the contribution is for tier 2 account. So the government has put in a restriction saying that until the elapse of 3 years, which is a lock-in period, a government employee who has contributed to tier 2 account cannot withdraw the amount from the tier 2 account. If he withdraws that amount, then that amount will be taxable. That means, which means to say that the tax deduction which has been given to him earlier will be will be reversed in the case that he has to pay tax on that. That is one lock-in period, which I said. The other one is for the partial withdrawal lock-in period, which is applicable even to the private sector employees. And partial withdrawal from tier 1 account, if you are making, then there has to be a lock-in period of 3 years, which means to say that there should have been a period of 3 years elapsed from the date you became a member of the fund. Otherwise, you will not be able to make a partial withdrawal from tier 1 account. That's the lock-in period.
Sure. So our next question is there any maximum exemption limit to section 80 CCD2?
80 CCD2, the maximum cap is only on percentage basis, which is 10% of basic and DA. There is no absolute number cap there. Like unlike 80 CCD or 80C where we discussed 1,50,000 and 50,000, there is no such monetary limit cap for 80 CCD2.
All right, so I hope that answers the question. I'll go to the next one. So here one of our attendees would like to know, as an HR, how we can check the tier 1 account from tax saving document which is submitted by the employee.
Yeah, very good question. See, so what happens is sometimes employees will give their screenshot of the bank statement. There you may not be able to find out whether it is a tier 1 or tier 2. It just says NPS contribution. So you should always ask for the account statement. And for the particular year, see for example, now the proof submission season is for 22-23. You have to ask for the NPS account statement for the financial year 22-23. So when you look into that statement, it clearly gives the entire account status of the employee under to what accounts he has contributed, whether it is tier 1 or tier 2, what is the amount he has contributed, what is the date of contribution, everything that account statement gives. So ask for the account statement, NPS account statement, and not the screenshot of the debit from the bank account.
Sure. All right. So next one is also a very interesting question, I feel. Here, one of our attendee would like to know when employees deposit the NPS fund, which account will this get deposited, whether tier 1 or tier 2?
The employer contribution has to be, generally it will be for tier 1 only, because the tax benefit is available to only tier 1, which we discussed that ATCCD 2, the deduction as per Income Tax Act for employer contribution is available only to tier 1. So it makes sense, and practically, generally, everyone goes for the tier 1 only as an employer contribution. If it is tier 2, then employee can contribute at any point in time. He can open a tier 2 account and he can contribute. So it is tier 1.
All right. Also, Mr. Amaranath, one of our attendees would like to know about the employer benefit. So the question is, what is the benefit for the employer towards the NPS contribution on behalf of the employee?
And there is no specific benefit available to the employer, I would say. The 10% contribution, whatever he is making, it is allowed as a deduction to arrive at the corporate tax profits as a normal salary income. So there is no specific benefit available on top of the expense to his P&L account. That's the only benefit employer gets, which is otherwise anyway available. Even if he pays that as a salary, that is anyway available. So, I mean, there's no specific benefit.
All right, thanks for answering that. I hope it's now clear. So the next question is, it's a good question, I feel. So the question is, if an employer initiated NPS, whether all the employees in the organization should come under this scheme, or is there any option for an employee to opt out?
No, NPS, as I said, it is completely flexible. So, scheme as such is designed in such a way that there is no mandate to join at all. So, even if an employer is introducing this scheme as part of their salary structure or a part of the payroll, he cannot mandate that all employees have to participate in this scheme. So, only the employees who see the benefit or who really would like to go for NPS only can opt for it. So it is not a mandate for all employees. Employees can opt out from NPS.
All right.
But once it is opted in, once they opt in, at least they have to ensure that the minimum contribution of 1,000 rupees is made every year.
All right. Yeah. Thanks for elaborating that, Mr. Amaranath. So the next question is, here our attendee has put a question, but part of it is not that clear, but I'll anyways take it up. So the question goes this way. Normally, we can start prospectively, but existing employees would want arrears also. So is it possible to contribute some arrears from the company, and will the company get exemption on that extra contribution?
Yeah, as I said, the question is not that clear. Arrears means, I mean, generally when we say arrears, I understand it as a contribution pertaining to prior years, which is not feasible in the case of NPS. However, having said that, arrears contribution, say for example, you want to introduce this scheme from today onwards, whereas employees want to contribute from April onwards. So that is feasible. So 10% of the yearly basic and DA you can take, and that can be contributed as a lump sum during the current year before March 31st. But if you want to go back to the earlier years and contribute that amount, that is not feasible under NPS.
All right. So I hope that answers the question. So next question is about the benefit of this to the nominee. All right. So the question is, if the NPS account holder passes away due to medical reasons, what benefit is there for the nominee?
Yeah. Very good question. So the nominee can withdraw 100% of the balance in the account. There is no restrictions applicable as to 60%, 40%, and all that. So 100% of the benefit can be withdrawn by the nominee.
Okay, thanks for answering that. So I'll move to the next question. How much percentage tax can be saved under NPS contribution, considering he's a salaried employee who is working privately?
So we already discussed this. So coming to again, there are two contributions here: employee contribution and employer contribution. Employee contributions first forms part of ADC, which is limited to 1,50,000. And if 1,50,000 is already met from other tax saving investments, there is an additional deduction available to the extent of 50,000 rupees under Section 80 CCD 1B. And apart from this, employer contributions to the extent of 10% of basic and DA is again allowed as a deduction under Section 80 CCD 2.
All right. Also, dear participants, I would like to just bring it up. I understand there are a lot of questions here to take up, but due to interest of time, we might have to skip few. But please don't be disappointed if any of your questions are unanswered. We will definitely respond to you through the answers. If not here in the live session, you can expect response from us from one of the Great HR mediums. But in the meantime, I'm just trying to tell you that we will try our best to take up your questions and answer them here. All right. Sir, next question is about tier 2. So can you please brief about the withdrawals on tier 2?
Withdrawals on tier 2.
Yeah.
Okay. See, tier 2, as we already discussed, it is more like a savings bank account where you can just invest money, and whenever you want, you can take it. There is no tax benefit for the contribution to the tier 2 account, and also there is no tax implications at the time of withdrawal from the tier 2 account. However, I mean, you may get some accretion to the fund as well in tier 2. Say, for example, you might have invested 50,000 during the year and the fund has performed and you have received 55,000 at the end of the year. That 5,000 will be taxable. Though it is tier 2, up to 50, it is your money which you have invested, which is not taxable. But over and above whatever you have earned as an income, that is going to be taxable in tier 2.
All right. Yeah. Also, our next question, I think one of our attendees is interested to understand the link between PF and NPS here. So the question is, can you please advise if PF accumulations can be transferred to NPS? Like for active employees as well as for employees who have not withdrawn their PF, although they are not contributing to PF anymore.
Yeah, very good question. So initially, there was no such provision, but later on, a couple of years back, the rules got amended, and they said that the PF accumulations can be transferred to NPS account. So now, as of today, yes, it is permitted. Entire lump sum accumulations from PF can be transferred to your NPS, and the balance, whatever you are transferring, is completely tax-free. That will not be taxed at the time of transfer. So you can transfer to NPS, and then again, normal NPS rules will be applicable, and the funds will no more be considered as a PF accumulation.
All right. Thanks for answering that, Mr. Amaranath. Next question is, employee has crossed 1.5 lakhs under ATC and 50,000 under 80 CCD 1B. Now, can SSC get the benefit on employer's contribution?
Yes, very much. Yes. This is one of the tax planning activities. So if employer is contributing to NPS, then up to 10% of your basic and DA will be an additional deduction apart from ATC and ATCCD 1B.
All right. Also, our next question, I think you have already partially answered it, but still here the person would like to know after 60 what happens. So the question is, if I did not withdraw 60% at the age of 60, can I get pension for the whole amount, as in how the pension is calculated?
Yeah. Yes, if you are not withdrawing 60%, yes, pension you will get from the whole amount, whatever the amount you transfer to annuity account, you will get the pension. So again, the pension we will not be able to calculate. Again, the whatever annuity plan you are choosing, there will be a custodian for that plan, and he will be investing your corpus in different funds, which you can choose at that point in time. Again, based on the fund performance and the market, whatever the market driven practices, you will get the pension.
All right.
There is no guaranteed pension again.
Okay. All right. So the next question is, sir, suppose I contribute 2 lakhs every year to tier 1 account. At the time of withdrawal, if the corpus is, let's say, 30 lakhs, would still 60% of this corpus will be tax free?
Yes, 60% of your, oh no, sorry, what is this? Suppose if I contribute 2 lakhs, okay, tier 1 account, right? Yeah, at the time of withdrawal, I presume that this is at the time of retirement. So if your corpus is 30 lakhs and you're withdrawing 60% of this, which means to say that the 18 lakhs will be completely tax free.
All right. Also, the next question is, can we have both personal and corporate accounts at the same time?
Yes, you can have. The law or the rule does not prohibit you to have two different accounts you cannot have. One person can have only one account. That's why the PRAN is given to you. So that number is sacrosanct. So if you have a personal account, once your employer starts NPS, and if you want to participate in that, you need to convert the corporate personal account to corporate account.
All right. Yeah, I hope that answers the question. And also, dear participants, I can see there are a few questions which are repeated, and we have already discussed them in the first part. So I'll not be taking up those questions here, but please do understand that the recording will be shared with all of you once the session is done. So you can definitely go back to the first part of our session and try and get the answers from there. So if you feel your question is not answered, please don't be disappointed. It could be either of two, either due to interest of time, or it could be because of the repeat of the question. All right. Sir, with this, I'll just take a couple of more questions before we end this session, because I understand our participants are very much interested in this NPS because it is such an interesting and I think a very useful concept. So I can say questions are just pouring in here. So the next question is there any threshold in absolute INR when it comes to employer contribution, which is 10% of basic and DA?
No, there is no absolute number limit for employer contribution. All that is 10% of basic and DA. So if the basic is 50 lakhs, the contribution can go up to 5 lakhs also.
All right. Also, one of our attendee would like to know about tier 1 in detail. So the question is, what does scheme E, scheme C, and scheme G in tier 1 means?
Just a moment. Yeah. Okay. Yeah. Scheme E is equity. Scheme C is conservative, and scheme G is I think it is somewhere balanced. So one is the scheme E is, which is very aggressive scheme, whereas the maximum percentage of the investment will go to equity. Scheme C is conservative, which is only a minimum percentage will go to equity investment. And scheme G is a balanced investment where your investment will be maybe like a 50-50 kind of a thing, where 50% goes to your government securities and 50% goes to your equities. So under tier 1, we discussed that investment options like default option and active option. Under default option, for simplicity sake, I did not elaborate on this. Under default option, again, you have 3 choices, which is what she has mentioned here. That is scheme E, C, and G.
All right. So I hope that answers the question. Next thing is, can you please elaborate on how the individual account works? For instance, in this case, there will be no employer's contribution. So on what basis can individual contribute to the NPS? And is it on a monthly basis or can it be a lump sum amount?
Yeah, see, as I already mentioned, it is completely flexible. The minimum contribution required for the financial year is 1,000 rupees. You can contribute monthly or you can contribute lump sum during the year. So generally what I have seen in my practice is if there is no employer contribution, employees will generally contribute at the year end like January or February entire 50,000, because they have to submit the proof to the employers at that point in time. So they'll go ahead and contribute in the month of Jan or Feb, depending on their payroll timelines. So, I mean, if you're contributing monthly, yes, you can contribute. Minimum contribution per transaction, as I already mentioned, is 500 rupees. So you can contribute monthly as well. It is completely flexible.
All right. So the next question is employer contribution for PF and NPS. If it exceeds as 7,50,000, then above contribution is taxable in hands of employee under section 17(2) perquisites.
Yes, it's a very good point. So the total employer contribution to PF and NPS, if it exceeds 7,50,000, the excess of 7,50,000 is taxable as salary under section 17(2). Yes, that's right.
All right. So I'll just take up last two questions. I understand I have already eaten up 6 minutes of yours, but just trying to take up all the possible questions here. So the question is, if in a new company, there is no employer NPS opt-out option available, however, NPS was being deducted in the previous company, what happens in that case?
Yeah, see, I already mentioned this. So this means from a corporate account, the employee has to shift to individual account, which is all citizen sector account. So he has to apply for an intersector shifting after leaving the employment, which is a separate form which you need to submit to your POP. And then, I mean, the POP or CRA, then you can continue the contributions. I mean, no need to worry. The fund will remain in your account and there is no threat for the fund. But only thing is the transactions may not be feasible, or even if the transactions are feasible, it will still show as an employer tagged account, which should not be. So please submit the ISS form and get it converted to individual.
All right. So, sir, one last question for today. I think it is already somewhat similar to the ones you have already answered, but if at all it is different, then probably here is the chance for us. So the question is, what happens if I have contributed for 10 years and then couldn't contribute further due to unforeseen scenarios? So what will happen to my account and when I go for the withdrawal?
Sorry, just a moment.
Almost in the end, sir. Like what happens if I have contributed for 10 years and then could not contribute further due to unforeseen scenarios? So what will happen to my account, and when I go for withdrawal, what will be the process?
Okay, see, I mean, I have never come across with this kind of a situation, but based on the rules, whatever they have given, the account will be frozen, because I presume that in this case, even the minimum contributions have not been made. However, it is not that the funds will not be available to you at the time of withdrawal. After attaining the 60 years of age, you can just go and submit whatever the formalities. You have to get the account activated. It will be deactivated. So once you activate the account and make the minimum contributions for all the years, again, it may be available for your withdrawal.
All right. So I think now with this, it's now time to end this session. But before that, once again, thank you, Mr. Amaranath, for this session. You have certainly given us a lot of insights on the national pension system. And also, dear attendees, for whoever the questions are not answered, or probably for those of you who might get some questions later after we end the session, here is the means to reach out to us. There's something called Great Tribe from Great HR. So basically, this is a knowledge sharing platform where you can post all your questions and seek your responses and answers from many of the HR peers from the industries, and also many experts like Mr. Amaranath. And in the bottom of the screen, you can see there's a link given for this Great Tribe community. Please feel free to sign up and post your questions. we will definitely answer them here. Also, if you have any other questions, please feel free to write back to us on the given mail ID. The mail ID is rakigautam@greatip.com. So please feel free to write back to us at this mail ID at any point of time related to Parichay. All right. So on this note, I would like to thank you one and all for joining us this session and for making it a huge success. And also, Mr. Amaranath, thanks for sharing all the expertise here. I'm sure our attendees are definitely benefited out of this, and we will be looking forward to see you again in the upcoming sessions. Till then, enjoy, have a great time, stay safe, take care. Thank
Thank
you.
you, Rashmi. Thank you.